All right, good morning, everybody. Welcome to the Friday Mastermind. Every Friday, 9 o'clock, we bring value to mortgage professionals and to leaders of mortgage professionals. You know, the whole theme of this, when Todd and I started this, Todd, has it actually been 6 years?
You know, I think it's been 6.5 years.
Oh
I think we started this baby in 2016.
Oh my gosh. All right. Well, it was a lot of the content we create in Mortgage Coach is just all about, not price, advice, and talking about how to be an advisor. And the theme of this originally was productivity, just how to be productive. Todd is the founder of Win by Noon. At that time, we had collaborated and created a training program with Darren Hardy called Insane Productivity. And this was going to be like every Friday, we're going to mastermind with amazing people and talk about productivity. Well, when it comes to being productive as a mortgage professional, nothing is more important than conversion. You get opportunities to do business, and do you have the right conversations and the right strategies and to get conversion? Yeah, time management is important. Winning by noon is important, but if you can't convert at the point of sale, you're not going to kill it. So we've got Dale Vermillion, who is the king of conversion. That's, by the way, he doesn't call himself that. He's way too humble for that. But I call him that because he's someone that I learned from over 25 years ago, even before I founded Mortgage Coach. That me and my company learned a lot of conversion strategies from Dale. So Dale, welcome as a guest to today's call.
Dave, great to be here. Thanks so much for having me.
Yeah, and Todd, I'll let you introduce the other crew on here, and then we'll get into some big ideas and strategies.
All right. Well, of course, I'll have to introduce our co-hostess with the most is Deborah Bird next. Welcome, Deborah.
We need some female blood in this group.
We do, and look how bright you are. We're all wearing like dark
female
colors.
blood. That's why you're here.
Exactly.
I know.
Exactly. And then, of course, we'd be remiss if we didn't acknowledge that guy to your left on our right. None other than the king of compliance, the guy who makes compliance training fun. So if you're a loan officer and you don't know Ken Perry from the Knowledge Coop and you just sat through another year of boring CE, it's on you, because there is great fun CE out there live oftentimes, but worst case is you can take it online with Ken and the Knowledge Coop. What's up, Mr. Perry?
What is going on? Happy to be here.
Yeah, you're kind of cut off. Dave's got this fancy new camera, and he's only wants half your face on there.
He's big timing me right now.
No, dude,
he's doing that on purpose.
Get closer. I mean, I'm not meaning to do that. So before we get into the topic at hand, I interviewed Mitch Kiter, who's top compliance attorney, and one of the things that always reminds me, whether I'm interviewing this guy, whether I'm interviewing compliance people, I always kind of come out of it going, you know what? If you deliver a great client sales experience, you're delivering a really effective sales experience. Like, you do not need to cut corners. And so as we go into the new year, I just want to remind every mortgage professional that you got to be compliant. If you want to have a sustainable career in this business and you want to be a good team player for the company that you work for, like, compliance really shouldn't be an afterthought. Like most of what you need to do to be compliant forces you to be a more efficient, a better salesperson. And so I always just like, how do we turn compliance into a competitive advantage? Because most people don't know how to do that. So that's enough on that. Ken, anything you want to say before we bring Dale on and we start drilling him?
No, I'm here to listen as much as I'm here to just kind of be part of it. That, the compliance side is so funny because it's not just about doing it right. It's about making sure that you're doing it right so that everybody else benefits as well. When you're doing something wrong and you're building your business that way, and then you find out it's wrong, that's like the most painful thing ever, because then you have to go back to people and be like, by the way, I was breaking the law for a really long time. So knowing it ahead of time helps you set up proper relationships, proper, partnerships, stuff like that. So super key.
All right. So Dale, the headline is how to optimize conversion in 23. Where do you want to start it, and where do you think people need to really start when it comes to optimizing conversion?
Well, I think it makes sense to begin at the beginning, and that is your response. It doesn't matter what you say if you don't have an audience to talk to. And it's amazing. I was just a couple weeks ago, I was down in Charlotte, North Carolina, speaking at the Lending Tree Summit that they have, their annual summit. And I was talking about conversion, this exact topic of conversion, and Scott Payne was up there, who is the head of STP Solutions, great guy. He's a conversion expert on Velocify. And he did a study, and here's what he found. Now I'm going to give you two study datas here. The first one is from Ellie Mae Ice, who did a study of 60 million mortgage leads in 2022. That's a whole lot of leads. And what they found was if you contact your borrower within 1 minute of either referral or 1 minute of their inquiring, you're going to have a 231% better chance of success of converting that thing. So 1 minute is the magic marker, okay? A lot of companies can do it in seconds, milliseconds, so you want to be quick. But when Scott talked, here's what he showed. He did a study on like 12 different lenders, thousands of calls, and you know what he found the average response time was? 2 hours and 57 minutes before we called back a customer who was interested. So if we're going to talk about conversion, the first thing we need to talk about is speed to prospect. If you get a inquiry, if you get a lead, if you get a referral, the very first thing you'd better be doing is calling them immediately. And this is really important with your referral agents that you're getting referrals from, because look, a lot of times we think if the referral agent gives us the business, it's our business, we're okay, we've got it. Don't kid yourself. It's too competitive out there today. The thing that you want your realtors to say about you is that you are incredibly responsive. And imagine this for a minute. Imagine that Todd is my realtor. He refers me a customer. I literally call within a minute. Literally, he hangs up the phone with the customer and I'm dialing that customer back. I take their application, build the relationship, do an incredible job. And that customer calls Todd and says, Todd, you're not going to believe this. That guy you referred me to, I literally hung up the phone from you and he was on the phone calling me. That establishes a massive experience right out of the gate, great service. That's what you want to be doing. Responsiveness is number one key to conversion every single time.
Whoops, I was waiting for Dave to jump in, but Dave disappeared. So Ken was going to be, all right, Ken, you go ahead. You be Dave.
Well, yeah, I was just going to ask, did they talk about why people don't? Like, it seems like a very makes sense, easy business move to make that call fast. Did he give any data on why people aren't doing it or any opinions on that?
No, there's absolutely no way to have data on that, unfortunately. You know, with people working from home, who knows? Maybe they weren't at their desk when it happened. You know, it could have been a multitude of factors. Here's the bottom line. You've got to make yourself readily accessible to your customers. And when you get an opportunity, when you get a customer who's looking to borrow today, especially today, because business is much slower than it's ever been from the responses that we get from customers. This is the time, if any time in history, when we should be all over that lead. We got to make sure that we make that happen.
So two things before we drill down more on this. First of all, anyone watching this, whether you're watching this on YouTube, you watch this on Facebook, you know, what is your speed to lead? And, you know, that stat that was just called out is primarily consumer direct leads. But just know, guys, that's what you're competing with, is an organization that has both the technology, the standards, to where they're trying to get there fast. Like, it's a race. And let's face it, every single loan, whether it's a referral from a realtor, someone wins and someone loses. And there are multiple lenders that are in the hunt on every deal. So I want everybody just to like self-audit. What is your speed to lead? You know, and I'd love for you to put that in chat down below. Number two, before we drill down this, I want everybody to also realize just getting to the lead for the first meeting is only that's first base in the race. And you know, most times, you know, especially when in mortgage coach land, you're having a call with the client. Maybe you already have the total cost analysis together, but you're having multiple calls. So just realize that there's speed to lead, and then there is speed to efficiently answer that client's questions, deliver the advice, and get them to commit to you. So, you know, the fortune is in the follow-up, and that starts with your speed to lead. Anything you want to comment on that, Dale? And then I'll go round circle and let everybody ask questions.
Yeah, I'll just say this, and you may have caught it when I said it, but I referred to it as speed to prospect for a reason. That was intentional.
I didn't actually catch that.
Yeah, I know we have both consumer direct loan officers on this session. We've got retail loan officers on here. We've got everything in between. to me, it doesn't matter where that opportunity comes from. This is the mistake we make is we're in the retail world and we think we have different set of rules that applies to other parts of the business. You don't. Everybody talks about their great service. Okay. What's the first thing most loan officers tell their agents about? Oh man, my service is fantastic. Well, you know what? It's like anything in life. Words mean nothing. Actions mean everything. Okay. You can say you've got great service. Here's how you prove it to me. Respond quickly to my client, give them an incredible amount of attention, treat them like absolute gold, better than I would treat them, and you're going to get my business all the time. So speed becomes just as important to me in the retail world as it does in the consumer direct world. In the consumer direct world, you won't even survive if you're not fast. End of conversation. It's over. Because to Dave's point, in a consumer direct world, especially if it's one of these aggregate leads where there's 5 other lenders, you got 4 others that are going to beat you to the punch. There was a study done by Denim Social last year. They did a study of 2,000 customers that were homeowners that did mortgage loans. And here's what they found. In 92% of the cases, they're going to buy from the first lender they talk to. In 72% of the cases, they're going to talk to either the first or second lender they talk to. So think about that for just a minute. You want to get there first is what you want to do. You want to make sure that you are focusing on approaching that customer as quick as you can before anybody else does. It establishes the high level of service, and think in terms of speed to prospect, not speed to lead, speed to prospect, because everybody's a prospect no matter where they come from.
So Todd, any comments or questions? Then Deborah, then Ken.
I think it's huge, and I think you make the right point, right? I think as a retail loan officer, the first thing that we all think is that, well, that's okay. If you are in a call center, you have to call within a minute, and that's not my competition. Or you think that's not my competition, and that they're not very good on the phone. And I would say you have to kind of get rid of that, because even if you got the best referral handed to you from your best real estate agent, while that person is waiting 257 minutes for you to call, they might get impatient and they might actually fill out one of those online forms and get a call from them. And what my experience is, because I don't know if you've ever tested it, calling a call center, but my experience talking to a big national call centers, they're actually pretty dang good. They've got great scripts. Yeah, they don't have MortgageCoach, which, gives us a competitive advantage in this community. But they're actually really nice people, and they really want to serve the client, and they are really good at building, relationship and rapport, just like you are. But if they're, 2 hours and 256 minutes faster than you are, you may lose that because of the fact that, 92% of them are getting there. So just don't get caught up in the idea that you don't have them as competition, or that they're not as good as you, because they are your competition, and they very well could be as good as you, and maybe even slightly better.
Yep. Good.
And the only thing I would add is, it's just, can't remember how many apps there are, but I want to say it's over 200 apps of on demand, where people's behavior, we're just used to instant. Like, I can order food instantly. You have Amazon Prime. And so Dave, you've always done a good job of educating this group about not just comparing yourself to other people in the industry, but to the Amazons or those innovators who are doing either sales or customer service at a much higher level. Let's compare ourselves to that and step it up. And so it's no surprise to me that it's within a minute, because look at how impatient we've become due to the ease of technology.
So one thing I want to piggyback on that, Deborah, is like when we designed, the MortgageCoach digital experience, we were really comparing ourselves to Instagram. We were looking at Zillow. We were looking at Redfin. We were looking at Amazon, and we were trying to help the mortgage industry deliver a mortgage experience that competed with their attention and lived up to the expectation that an American consumer has, that, whether they're flying somewhere, whether they're Ubering somewhere, whether they're shopping for a house, using whatever the apps are, that the mortgage experience is on par. So I would just put an exclamation mark around what Deborah said, and tell anyone watching this, like, if you are still delivering a fee worksheet, you are not delivering an exceptional digital educational borrower experience, you're in second place, or third place or fourth place. Before we go to Ken, Dale, anything you want to add to what Deborah said and what I just said?
The thing that I love that Deborah said there was the whole idea of don't compare yourself to anybody but the very best. And in fact, I would even tell you this: just set a standard so high above everybody else that everybody's comparing to you. That would be my advice. The bottom line is, if you live a comparative life, and I talk about this a lot with originators across the country, you got the wrong standards. Because we can always find somebody that makes ourselves feel good about ourselves. I got all kinds of issues. I can find all kinds of people that I could say, oh, I'm better than them. But that isn't the standard we're looking for. The standard is exceptionalism. That's the standard. We want to wow the customer. That's what we want to do. We want to wow the partner. But you know what? The first impression you make is your response. You only get one chance at a first impression, oldest saying in the book. So you know what? It happens on how quickly you respond. And if it takes me 3 hours, like the average, or a day to call somebody that I've gotten a referral on, what do you think the expectation in that borrower's mind and that partner's mind is of how you're going to respond as you're going through the process once that loan's in process and we got issues? You're trying to set the standard quick. I love how Deborah talked about that. I love that analogy that she gave. I think that's the right mindset to have.
So before you go, Ken, Mortgage Coach Innovation Team, what Dale just said, and really let's get a little bit of what Deborah said and then have Dale play off it. We need a little clip on that. And let's make sure that word exceptionalism. I love that. I'm gonna start using that, the Dale Vermillion exceptionalism quote. I noticed we got a few hands clapping. Notice the little reaction button down at the bottom, everybody. If you're on Zoom, if something you like, give us a clap, give us a heart. Ken, what do you got for Dale?
I think I figured out the cool camera trick. If I hold my hands up,
No, don't do that. That triggers my camera. Oh my God.
You did it. You're big time.
Well, I didn't mean to do it. I didn't mean to do it.
So yeah, I would say you have to get yourself in the mind of the consumer and how people live, right? You're a to-do list item, right? Get a mortgage is a to-do list item. And I've shopped for insurance and I know I sit down and I go, today I'm going to get the insurance done, right? And then I call an insurance agent or I Google something. And then I need that to be done. As a consumer, I need to be done with this soon. All I'm trying to do is hand it to somebody else to go, oh yeah, I'll take it from there. I got an insurance broker this year and he killed it. And then I didn't have to do anything. So the consumer wants to get rid of this to-do item. You just have to take it from them as fast as possible in that window. Because if you don't, I mean, how many times does somebody reach out? They're like, I really need to do this. And then they never call you back and they never answer your phone calls because that window is closed now. You're done with that. They're done with that. Or they've moved on to somebody else who can solve that to do for them.
Yep.
So before we go down to the next question, Dale, anything else you want to cover let's just call it chapter 2. We're almost done with chapter 1 of this book. We're about 18 minutes in. Before we go to chapter 2, anything else you want to say around speed to lead and timing?
I think we covered it. I think we hit it very well.
All right. So chapter 2, and I don't care whether it's chapter 2 or chapter 3 of this conversation. This is a Mortgage Coach community where people either are advisors and they're giving every family a total cost analysis, or they want to be. Like you would not be in this community if you didn't want to be an advisor versus I closed your loan on time and I got great rates. So what advice do you give? What are the best practice of being an advisor versus a loan officer from Dale Vermillion?
Yeah. So let's go to step 2 then, in what I think is the second most important thing in conversion, and that is, what are you saying to your borrower when you get on the phone in that first minute? Absolutely critical. Studies tell us that the average attention span that people have in an initial conversation is 37 seconds. You've got 37 seconds in order to wow them if you want to keep them. I got to tell you, I've listened to thousands of calls over my career of, loan officers on the phone with customers. I've been bored to tears in 95% of them, especially in that first minute. There's nothing in there that is compelling. There's nothing in there that creates what I call a curiosity hook. And that's what you want to create. You want a compelling statement out of the gate that creates a curiosity hook. Now, let me give you some examples of some of the common mistakes we make, okay? Because everybody on this session will track with everything I'm about to say here. There are common things that loan officers say to borrowers when they get on the phone with them that are absolutely devastatingly dangerous to your conversion rate. So let me give you a first example, all right? We use something we call a refusal response. Okay, what's a refusal response? Well, what's the first question every borrower asks us? Typically on a mortgage loan, what's your rate? Okay. Here's our response. Well, you know what? I really can't tell you that till I know a little bit more about you. So why don't we get some information on you first? Okay, hold on one second here. First impression, I'm on the phone with a total stranger. Never forget this one golden rule, okay? A mortgage is the single largest financial transaction people go through in their lifetime. Big decision. And it is a stranger talking to a stranger in almost every case about that decision. Do you think they're a little bit nervous? Yes. Do you think they're a little bit wary? Yes. To the point that was made earlier, I think Todd made this point. Nobody likes doing a mortgage. It's not like what we do for fun. You know, I might go window shopping on the weekend with my wife, but I don't go mortgage shopping on the weekend with my wife, okay? It's just not what we do. So we need to understand there's an intent purpose here. When they get on the phone, if the first thing we say is, I'm not going to tell you, you're already in trouble. Because what they're now hearing is you're resistant to the first question they asked you. Here's another mistake we make. It's called an avoidance response. Now, what's an avoidance response? We answer the question with a question. I love this one. What's your rate? Well, what are you trying to accomplish? Okay, wait a minute. Hold on. I asked you a question, a direct question, expecting a direct answer. Your answer was another question. So if you're answering my question with a question, what do I think your rates must be, team? Hi. Instantly, I'm like, oh, your rates aren't very good because you just dodged that one like a bullet. And I hear loan officers do this every single day. Here's the third one. We get on the phone and we qualify the borrower right away. We use what I call a suspective response. It sounds like this. What's your rate? Well, you know what? That depends. Really, on what? Well, your credit, your income, your debt ratio, your down payment. We give them this whole litany of things. Fact of the matter is, that's not even the true list. There's more to it that, but here's the problem. Here's what happens every time. An A+ bar, you know what they say to the loan officer? Well, you know what? I got perfect credit, perfect income, perfect everything. I'm your perfect borrower. What's your perfect rate? And they instantly want the lowest rate in the country. Anybody tracking with me on this so far? Give me a hands up if you're sitting there going, oh my gosh, I've heard that one a million times.
Everybody does.
Yeah.
Okay. And I'm like, oh, and they're literally argumentative and defensive with us because they think what we said to them was they're not qualified. We never said that once. See, the problem with all three of these responses is they're all accurate responses, but they don't work because perception is reality. It's not what you say that matters, it's what they hear that matters. So if you refuse to answer my question, okay, now you're argumentative to me, I don't want to work with you. If you avoid my question, your rates must be high. If you tell me it depends, then I'm going to press you for the best rate. Or here's the other side of that equation. If I've had some credit issues, I'm going to say, well, you know, we had a bankruptcy and I'm going to think my rate's going to be through the roof. I'm going to think you're going to penalize me for my past behavior. Those don't work. And here's the worst of all of them. What's your rate? And we quote them one, or we quote them a range, or we quote them as low as. I love it when we quote a range. Well, our rates range from 4 to 6. Okay, who the heck says I'll take the 6? Nobody. They all want the 4 and that's too high. Are y'all with me on that one right there too? The point is simply this. We say the wrong thing. We shouldn't say any one of those things, and we say all of those things. Here's what we need to do. There's only one proper answer when a borrower asks you what the rate is. And the proper answer is, that's a great question. I'm really glad you asked me that. We're going to get into that in detail. Fact of the matter is, I don't know yet because I don't know anything about you yet, but I can assure you this. My rates are absolutely awesome. We've got some of the most competitive rates in the country, and I'm going to make sure I get you the best one I can. And if you don't love it, if you don't love what I can do, you know what? No harm, no foul. You can always talk to somebody else. It's that simple. And you go right from there into your benefits. How are you now going to benefit that borrower? Move from your response to, let me tell you 5 ways I can help you. And all of a sudden, you've got them eating out of the palm of your hand because what they heard was, great question. Glad you asked me that. They love that because now you're responding to them in kind. You're telling them the truth. I love this when loaners go, well, wait a minute. But then they're acting like you're avoiding them. No, I'm telling them the truth. The fact is, none of us know the borrower's rate till we take an application. Can we all agree to that statement right there? Nobody knows the rate till we look at their credit score, not what they tell us, but what the credit report tells us, till we look at their income, till we verify their debt ratio, until we understand their situation. So any rate you quote up front is an absolutely false statement. There's no truth to it whatsoever. None of us are dishonest people, so don't come across dishonest when you don't mean to come across dishonest. You're not meaning to when you do that, But the fact of the matter is that's what's happening. What you want to do is you want to respond in kind. You know what? We've got incredible rates. I'm going to get you an absolute great rate. And if it's a referral, this is so easy because you say, you know what? That's part of the reason the realtor sent you to me, because we've worked with that realtor for 10 years. And you know what? We're the best lender they've got. You can leverage your relationships on that to win confidence and credibility with the borrower right out of the gate. The key is you got to open your mouth immediately, and you got to make sure that number one, you're greeting that customer properly. Number two, you're letting them know your name. I literally listened to 100 calls last week. I am not kidding you. 8 of them, the loan officer never even said their name. 92 of them, the loan officer never said, thank you for the opportunity to work with you today. Only 8 did out of 100. All 100 should have. And then from there, go right into, so honored to work with you. Hey, let me tell you what I'm going to do for you. Let me tell you a little bit about me. Let me tell you I'm going to save you money. And if they say, what's your rate? That's a great question. I'm glad you asked me that. I'll get into that. We've got extremely competitive rates. I don't yet know what it is, but I will in a little bit. But give me a few minutes to first learn more about you. And they're going to be way more open to talking to you at that point because you're honest, you're forthright, and you give them benefits. Everybody wants to know the reason why you want it. I know I went on a little bit of a tirade there, Dave. I apologize. I hope that was okay, but I wanted to give a good answer to your question.
Well, and Mortgage Coach community, you can't get the home run, which is the loan app, if you don't get on base. So
Right.
what you heard at the beginning of this was how to get on base. Be the first one there. And then what you heard is how to get to second base. So they are listening to you. One thing I want to make a point, and I'm pretty sure I may have even learned this from you, Dale, back in the day, is there are some people, no matter what you say, no matter how bad you are, you were the first one there and you're going to get the deal.
That's right.
And there are some people that they actually want to pay the highest price because that's why there's a Neiman Marcus. Like they don't want the lowest price. And everything Dale is telling you, remember guys, the start of this is optimize conversion. He's giving you best practices so that, and guys, and there is a percentage of people, no matter what you say, no matter how good you are, you're just not going to get it. They either want to, become a loan officer themselves and do it themselves, or they want to work with a bank or a brand or, stars just on a line. So there's a percent no matter, so guys, this whole call and the rest of this call is optimize your conversion. And so if you've been breaking Dale Vermillion's rules and some of these best practices, you're still closing loans. Yeah, you can screw up and still win in this business. But we're talking about optimization. So guys, we're at the halfway point. Does anybody have a quick comment or thought? Let's just go around. Todd, you go first, but let's make it quick because I've got like 3 more topics I want to make sure we get in this next 30 minutes.
I'll be really quick. Even though you just insulted everyone who's closed loans and has done it wrong. You're like, yeah, you sucked, but you still got it done. So I like that.
No, I said you're not optimizing yourself.
That was good for the
you're not optimizing.
But I think, Dale, you just nailed it. I mean, number one is the script was gold, right? That's a great question. I mean, you're acknowledging the person and you're making them feel great. And the other part of it that you said, which I think everyone needs to not pass up is, who are you? And thank you for giving me the opportunity. You got to connect with people first. And so I love that you brought that up because I feel like people forget that. They feel like they want to get right to business because the person's in their face trying to check it off their to-do list, like Ken said. But in the end, you really do want to connect with them. So just never forget, connections matter in 2023 more than they mattered in 2022, and they mattered in 2022 more than 2021. It still matters to connect.
I love that.
Deborah,
The only thing I just want to put an exclamation mark around is when you said it's not what you say that matters, but how they hear it. So I just thought that was powerful. Thank you.
Thanks, Pep.
Yeah, I love this. I would just say, take everything Dale just said and then practice it, because most people don't practice their craft. And especially when you've been doing it for so long, you don't really practice how you're going to talk like that or how you're going to script it. So get somebody, sit down with them and go back and forth until it sounds as authentic as possible, that like you're able to nail it without sounding like you're scripted. But like Dale doesn't sound scripted because you said that how many times? I mean, when you
10
say
million.
yeah, exactly. Then you get better. But most people don't want to practice, and I think that's key.
So Dale,
Let me say one quick thing about that. Ken, I appreciate that thought. When I was a manager, I managed for 12 years. I managed top sales teams. I literally had 2 rules. You check your email before 11 o'clock, I fire you. Why?
Wow.
Because there's nothing good in there. That's why. Because I don't want you starting your day with problems and trouble. I want you starting your day with sales. Number two, you make a phone call without 15 minutes of role play and warming up, I also fire you. That was my 2 rules. Now, by the way, I hired mostly college athletes. I hired all new people off the street, never hired an experienced mortgage loan officer my entire career, and I beat the tar out of all of my competitors because I had people that just learned it from the ground up the way I wanted to learn it, and they were super motivated, super competitive, super outgoing. That was the personality that I hired. So they understood practice. These were accomplished athletes is mostly what I hired because I was an athlete. I played semi-pro ball and I just liked hanging around athletes. The bottom line was simply this. I would say to them, if your coach, if you showed up at game day without warming up, they wouldn't let you on the field. Why should I? It's a really important point. You only need 10 or 15 minutes each morning, but get all of the bad stuff out. Don't make your very first call to a borrower that could be worth $2,000 to you. Because if you blow that one, you don't get a second chance. You can't call them back, go, you know what, I screwed that all up, said it wrong. Can we try that again and act like that never happened? They're not going to allow it.
Well, and y'all know all your biggest and best real estate teams that you're all trying to get to work with. That's what they do every day, typically for 30 minutes before they start their 3-hour call block. Every big team I know does that. And it always, in my mind, I question, well, why doesn't the mortgage industry?
So
Sure.
I wanted to pause on that, guy, because that is a big deal. You know, I mean, 2023 on is going to be different in the industry. There's going to be the haves and the have-nots. And the haves have the right technology. They also have the right training, and they have the right skills that have turned into the right sales habits to thrive in this market. It's not like rates are going down to 2% this year, guys. You know, and even when they get down into the 4s and 5s again, guys, there's, I don't know if it's 12.5 or, you know, or excuse me, it's somewhere between 12 and 13 trillion in mortgage debt in America. And guys, we know how many loans, how much volume was done in 20 and 21. So it's about 8 trillion. It's about 8.2 trillion. So that means there's 8 trillion in mortgage debt that starts with a 2 or a 3. So going forward, you need to be an advisor. You need to be an educator. Now, again, this assuming you want to optimize your success. Like, will you be able to close some loans and not say the right things and not become this varsity player, all-American advisor athlete, mortgage athlete? Sure, you can close some loans, but if you want to take market share, if you want to crush it, we're really moving into an era of high touch, high tech, data-driven mortgage advisors. So Dale, here's the next chapter. You know, we collaborated and created, you know, Meet the Market. You know, and for anyone listening, I'll put a video down below where, you know, we'll sell this thing to you for a half an hour. You know, call it a demo, call it an overview, if you want to learn more about Meet the Market. But you know, the why we had around that was that we know every lead matters. So let's make sure loan officers are calling on sales boomerang leads and they're saying the right things, because the first minute matters. Let's make sure that they're using MortgageCoach as a conversion tool with borrowers. And then, you know, you created a whole section on how to be a data-driven mortgage advisor and win with realtors. So we've done that. For anyone listening, it's a 3.5-hour digital online training program. So not only will you get to hear Dale Vermillion training, but you'll get tested at the end of each micro lesson. But knowing that you've gone through that experience, Dale, you know, and I'm going to put a link down below in a minute, everybody. What are some of, help people understand how to transition from speed to lead, frame the conversation to MortgageCoach, you know, like to advice. If you could just share that with everyone, and then, you know, and then we'll just do a free for all, guys, in the last 15-20 minutes.
Yeah. Well, I live by an old adage that goes like this: options create choice, and choice creates ownership. One of the things that I've taught for decades, and Dave, you know this because you know, when you and I worked together 26 years ago, I talked about this, that the greatest salespeople I know don't act like salespeople. They don't sell anything. And I have a saying that's very simple. It says, stop selling, start solving. That's really what great salespeople do, is they solve the financial needs of their borrowers. They do that through education and advice, not through selling anything. So what we need to make sure that we are doing is, once we get past that initial conversation, that initial rate thing. And by the way, we go way deep in Meet the Market on this. I mean, I literally spend a whole bunch of time on teaching you how rate doesn't matter, how to overcome all the rate objections you get, how to create a great value proposition up front so you can get past that. But once you get past that and you get into the application, the key is to understand the borrower at a level that nobody does. It's not just to take an app. And let me say this to you, quit shooting the links off to people and letting them self-serve, okay? That is the kiss of death in 2023. Borrowers want relationship, and borrowers want an advisor. And here's the reason why. They're confused on whether it's a good time to buy or not, or a good time to refinance or not. Even if they're inquiring with you, they're still in the back of mind going, should I be doing this? Should I really be buying a home when rates are in the sixes? The answer is overwhelmingly yes. I can give you a whole bunch of reasons why this is maybe a better market to buy in than the market when rates were in the 2 and 3 range. The bottom line is this: I need to be the person communicating that to you as an educator. And then once I get that application, I spend time in relationship and I really understand you. Now the key is, I'm not going to come back with just giving you what you asked me for. That's called order taking. Anybody can do that. I'm going to give you what you didn't ask me for. I'm going to show you things about how this mortgage makes sense for you, not just from a short-term perspective, but a long-term perspective, and provide you options so you get choice. When you get choice, you feel like you got to make the decision. You don't feel like I sold you anything. And the beauty is, when you make the choice as the consumer, you own that choice. It's your idea, not my idea. I didn't influence you into anything. I just educated you through a couple of different options. And you said, oh man, I really love that one. And you know what your closing statement becomes? You got it. Let's order your appraisal. That's it. That's all you got to say. You're done. You don't have to oversell. You don't have to do anything fancy. You let the TCA do all of the selling for you, and you just agree with them. You affirm their decision and move to the next stage. So the key is to know your borrowers well enough, have enough relationship that you've established trust with them, then use the TCA to create those options so they have some choice. It gives them the education and the knowledge and the background to understand both the short and long-term benefits to what they're doing. And all you got to do is steer the ship right to the close. It's so easy to do.
So I want to, close out with some, what are some of the most common options, but we'll come to that in a minute. Deborah and Todd, Deborah, why don't you go first this time? Any comments to that or any questions you have?
Well, the first thing that I was thinking of is, we know that most of the buyers in the next couple years are going to be the millennials. And there's really very little brand loyalty. It's almost like you're constantly in consideration. And so if you're not creating those wow experiences, then you just become forgettable. And so what advice goes back to, does your advice make a difference? Improving it so that you are memorable, so you're in their head. Because let's face it, some people, it takes like 4 months to finally win an offer or to find a home. So if you're constantly in a state of consideration, it's not just a one and done on that one call. It's constantly reaching out and just deepening that relationship and, highlighting the emotional connection where you're solving their biggest financial concern.
Todd, anything you wanted to add?
Well, I mean, he was speaking your love language, Dave. Dale said, let the TCA do the selling for you. And I think that's just, you said it so eloquently, Dale. I mean, the bottom line is this: when you give a TCA that's got 3 or 4 options and you educate the consumer so that they understand what each option is, then they can run it through all their head and heart, make whether it's a financial or emotional decision, but they've made their own decision and you didn't sell them anything. And Dale just nailed it. I mean, they're all in on their decision. You just gave them the options. And that's what the difference is between I think people who have an easy sales process and those who stress and struggle with price exceptions and all the tension that Dave talks about a lot in the sales process. So I thought that was just gold.
Good.
Okay, I'm going to add a compliance piece. So if you
Oh
are,
crap! What? Who? Come on! Who cares about?
I know,
Who
no,
brought the
you're gonna
compliance guy?
you're gonna love this. If you do veteran loans, VA loans, or if you do loans for people who have veterans in their family and you don't understand the Service Member Civil Relief Act, you're not educating your consumer on what is really important for them, right? And I saw it this morning on Facebook. A guy just helped a person on active duty, but that guy had his credit cards, all the interest rates were too high. Credit cards have to go down to 6% as soon as you go on active duty. If you know that, and they don't, because they got it during their like boot camp training when they were too busy to like fully get everything they were taught. If they don't understand it, you do, you're able to save them a ton of money. And that's being better than just doing loans for people. It's bringing so much more value. And you save somebody like that, you know, you get them, there was a lawsuit, you could have got them $125,000. And if you know the law, you go do that for somebody and tell me they're not going to keep using you for the rest of their life.
And can one more compliance question when it comes to options? If you are a loan officer and you give, you know, interest rate options, no points versus 2 points, or you show affordability options, 2-1 buy down, is that a good thing from a compliance? And is it a good thing to make sure that you give that experience to every single family? And you know, so speak to that.
I could go for hours on that, but you know how I feel about that. It's absolutely a good thing because it's not your decision what loan they choose, it's theirs. It's your job to show them those decisions they can make and to show every single borrower in the same way what decisions they should be making. So if you're giving one person a TCA and then another person, you're like, they won't understand it. That's, by the way, how discrimination lawsuits start. So it needs to go to everybody. They all have the same options. And if you believe that something gives somebody a better chance at understanding it, why wouldn't you give that to every single person? And why would you pick and choose who you think will understand it? That's where we get into trouble. So it absolutely is great for people. It's a defense for you in a case where they say you forced them into something. You can be like, look, I gave them these options and this is the one that they chose that I documented in my file. So absolutely.
So guys, we're almost in the fourth quarter. We're in the last 3 minutes of the third quarter. I'm super passionate about what, you know, Dale and his team and what we've created with Meet the Market. You know, and I really want to help loan officers optimize their conversion. And I want to help loan officers optimize their leads. So really would love for you guys to make sure you make an educated decision on Meet the Market. You know, there is a link where Dale, myself, and Alex, our Chief Vision Officer, you know, we did a demo on it. So there's a link for that. And also, if you just want to sign up, we got a link for that. I am going to play just a little bit of a micro content, a clip from one of the lessons, just so you guys get a flavor for the quality of this training. So check out a little clip from less than 2 minutes.
Here's an absolute truth that I've learned in my career. You can get a low rate and a bad loan and a higher rate and a great loan. It's not the rate that dictates whether the loan's a good loan. It's how I create and configure the loan to benefit my borrower. So I can give you a low rate loan that I don't provide great service. I mess up all kinds of things during the process. I give you a term that isn't the right term for your long-term situation. It doesn't help you in the long term. It actually costs you a bunch of extra dollars that you were saving up front because I extended your term and cost you a bunch on the back end. It doesn't give you the cash you need for the things you're looking for. It doesn't provide the right down payment to put you in the right kind of home. It doesn't provide you with the right kind of payment that you can afford that helps your family for the future. It doesn't create the savings you needed or get rid of the debt you need to get rid of. There's a lot of things you can do wrong in a loan, but give them a low rate and make it a loan that isn't very good for them. And you can also give them a loan that is at a higher rate that if you do everything right, that rate's not going to matter. That difference between you and your competition is not going to be the reason why they choose. They're going to choose because the loan is better for them. Because here's what I've learned to be absolutely true. Price and value are separate. Now, by the way,
So guys, that's about 90 seconds of a 3-hour skill-based sales training platform that you know Dale and our team created to help you get a bigger ROI and close more loans from data insights powered by Sales Boomerang and MortgageCoach total cost analysis. So Dale, thank you so much for this collaboration. You know, anybody else want to say anything before we go into Q4 of this call? You know, we're going to go into the fourth quarter. We're going to close it strong. Todd, what do you got?
Well, what I would say is, I just don't think there's a lot of sales training in general in the mortgage space. So, I'm excited to check it out, because I think that that's a real gap, right? I know, Dave, you love the book, The Challenger Sale. And it's funny, I've mentioned on here before, once a month, I teach a group of financial advisors. And so does a leader of a Keller Williams organization. He teaches them as well. And it's funny because he and I had lunch yesterday, and he said the funny thing that all of the producers in this insurance company want is they're tired of hearing the insurance guys talk about, the technicalities of the product. What they really want is more of me talking sales, and then him talking, building the team and leadership. And so, think about it in your, analyze yourself as a loan officer. How good are you at sales? Have you ever had any sales training? I think for me personally, the answer was no. And I've learned so much from this community, but I think that's really where, this is a great opportunity for those of you, especially those of you who are struggling.
Appreciate it.
Dave, I had a, go ahead.
No, you.
Oh.
No.
I just had a text from someone asking can you buy like group packages? If it was a branch manager or a regional, is it just individual tickets, or can you explain a little bit on that?
Well, I'm glad you asked, Deborah.
What a great question you got via text. Only Deborah gets text during the calls.
No, by the way, that was not a plan. That was not a plan. But if you go to the website and you scroll down, we've got some testimonials. We've had a lot of people sign up. My goal is for thousands of loan officers to do it. So first of all, if you're buying one license of this, don't ask for a discount. There's not. Dale teaches not discounting, and he walks his talk. He really put in a great program. It's a great value. It's $4.99. Button to click, and these are the tiers. So yeah, there is a discount for a branch that goes down to $4.49, and if you really arming a sales force, institutionalizing advice is success with a sales force, it goes down to $3.99. And just so everybody knows, it's like got chapters of a book, and every one of these chapters, going from the environment to the foundations to conversion to closing and partnerships. Each one of these is a class. It's a total of 31 lessons, a total of 3.5 hours of video content. And, like my challenge to Dale when we were, designing this is I wanted it to be like a 1 to 2 week boot camp, sales boot camp for loan officers that want to optimize conversion with MortgageCoach and Boomerang, and branches and regions that want to optimize conversion, with, king of conversion, Dale. So I think I over answered that, Deborah, but anything else you want to say before you get any thoughts from Ken?
Nope, that's it.
You got anything?
Yeah, this is the year you train harder. Like, it should hurt. Train till it hurts, because what you did last year and how you got all those loans in the bank last year is not the same way you're going to get them this year. You have to work way harder for it. And so get that training in, get that practice in. We talked, and I'll do a video on this later. We talked about the first mile is supposed to be hard. For every runner, they'll tell you the first mile sucks and it never gets easy. But mile 2, mile 3, mile 4, you start getting into this habit, and your brain starts to loosen up, and your brain starts to be able to think, and everything becomes awesome. Most people don't make it to mile 4 because mile 1 is so painful. So this year should feel painful. And if it doesn't, maybe you're not, working hard enough to get that pain, to get that growth, because growth does not feel awesome sometimes. So it should be a year that is hard and that you put in all the time.
But one last thought, and then guys, we're going to close strong. I've got a question for Dale, but here's another thing. If you haven't really audited your scripting, and let's say you're not killing the first minute, and let's say you're not killing, how you transition from I have a borrower interested to a total cost analysis, and you don't have all the scripting, it's a lot more painful than if you've really optimized your talk track, optimized your sales strategies. You're making your job harder. So anyways, enough on this. We hope that, thousands of mortgage coaches go through this Meet the Market. And we just hope that if you're a mortgage coach, you crush the competition. We're trying to create a community and a platform that makes you more competitive. And again, my biggest mission of all is the consumer. I want to change how people get into debt in America. And I do believe that, selling right, selling with options, doing everything Dale says to do, puts a consumer like much better off. They're going to retire faster. They're going to achieve financial freedom faster. They're going to build wealth with real estate faster. So it's like, America's winning and mortgage coaches are winning. So Dale, anything else before we go into the last question to wrap up this mastermind?
Yeah, just one thing that I want to point out. Deborah said something really important earlier when she was talking about the millennials. Remember, 43% of the purchase market this year was first-time buyers. Next year, it's going to be even higher than that. Population numbers, if you look at the population for baby boomers, my generation, and Gen X, 132 million people. You look at Gen Y, Gen Z, you're now looking at 168 million people. So we've got a lot of people buying homes. And let me just say this about millennials, because I know a lot about millennials. I own 4 of them, so I'm pretty familiar with them. And I employ 3 more. You know what? You hear a lot of talk from loan officers about, well, the millennials, they just want the link, and they just want it all being done technology based. They don't really want to have a conversation. There's nothing further from the truth. Let me tell you that right now. What they want is what Deborah said, to wow them. But what they really want more than anything is you to educate them. This is the smartest group of people in world history, yet they don't know anything about a mortgage because it's not trained in college. Okay? So you need to understand the millennials are the ones that really want to be nurtured with education. And when you do that, you win them lock, stock, and barrel. And the thing I love about millennials, they're very community-minded people. So they're going to tell all of their friends about you, and you're going to get a ton of business when you do it right.
All right. So I kind of have 2 more questions. I don't know if we're going to get to all of them, but part of how I build this was, be prepared to crush it in 2023. And Dale and I shared a stage recently at a mutual client of ours, Jim Mortgage. And this is a picture of Dale. I love this picture. Check out the look on Dale's face. But the key to success, to success today is all about education. And I think we've covered that. We've talked about that. But, he talked about contract versus approval. And he talked about the different types of options that we need to give families to win in 2023. Dale, I want you to just share some of your thoughts on, contract versus pre-approval, because, we're in a market now where it's not even enough to get a pre-approval.
Right.
We're in a market where you want to create value for a realtor and you want to create value for a home buyer, we got to get them under contract. So would you mind, sharing, just, 3-5 minutes on your philosophy there?
Well, what you just said is absolutely true. Look, the traditional way that we handle purchase leads is, okay, I'll get you pre-qualified. Now we get smart enough in 2022 to say, no, not a pre-qualification, a pre-approval, so that it's a stronger offer. I'll get you a pre-approval, and then, you go ahead and let me know when you're ready to go. That is not going to work because there's too much competition. Deborah talked about it earlier about how people have to go months sometimes before they find a home, might have to go through 4 or 5 offers on different properties to get it. We don't win until there's a contract in place, nor does the borrower, nor does the consumer. So what we have to do is we have to start the conversation from the beginning with the consumer about this and say, look, every other loan officer is going to give you a pre-approval. I'm not going to just do that, but I'm going to actually educate you on how to get into a contract. I'm going to show you how to be a strong buyer. I'm going to educate you on things like seller concessions and understanding earnest money deposits and understanding how to do it. Because here's what I know, the realtor's not teaching them the things they should. They don't do that anymore. They used to do that years ago. Now they don't really do anything but bring 2 parties together and just kind of let technology do the rest. So that poor consumer is wondering, okay, I want to buy a house. How do I get in it? So we have to be the educators. And I have a very firm philosophy that I've taught loan officers forever. Here's the philosophy. Do not let the real estate agent be the primary relationship piece in the triangle between you, the borrower, and the real estate agent. You be the primary piece. I think a lot of times we yield to the agent that, well, they're the center of the transaction. Oh, no, they're not. You are. You got the money. They want it. Okay? You've got the opportunity. They need it. No commission happens for the realtor if you don't close that loan. So the whole focus today is not let's get your pre-approval and see what happens, because I'm seeing way too many pipelines across the country where loan officers have a whole bunch of pre-approvals that never end up going anywhere. In fact, they call a month later and the bar's been out of the market for 3 weeks. They changed their mind and got out and never let the loan officer know. What we've got to do is help them work through getting into a contract by educating them on how to be a strong buyer, on how to make sure that they're making a good offer, on how to understand all of the things that will help position them better to both the realtor and the seller. When you do that, you get them in a contract faster, you get paid faster, they get their home faster, they love you, and they refer you to everybody. And you'll notice every time I've spoke, what do I end it with every time? They'll refer you to everybody. Do not forget, you are not selling to get this deal. You are working to get this customer for life and everybody they know. That's what top performers do. I have trained over half of the top 25 loan officers in the country on the Scotsman's Guide top 25 list in my career. I've been around the best of the best of the best. And let me tell you what I know. Every one of them does it through referrals, but they do it through referrals because they do it right in the initial transaction. Oh, you're muted, Dave.
Sorry that. So guys, we're totally committed to your success. I mean, one of the things I'm talking about from a lot of stages is just like, what are the top 4 strategies used to recruit realtors and get people under contract? And I just can't emphasize enough, like if you cannot show affordability options in this market and do what Nicole Ruth is doing, do what Denise Donahue is doing, what, all the mortgage coaches that I showcase. But if you can't like deliver this kind of experience powered by Mortgage Coach, optimize your database powered by Boomerang. And then most importantly, it's not what you do in the technology, it's what you say in front of the technology. Because you never get to the technology and the technology is not a wow if you don't have the right scripting, you don't have the right tactics, you don't have the right training. So we got 3 minutes left. Let's go around the loop with closing thoughts. Todd, I'm going to have you go last as Mr. Win by noon and really have you kind of wrap a kind of a coaching bow around this. But Deborah, closing thought.
Go to Todd first, because I'm still collecting my thoughts.
Okay, well, no, Todd, you're still last. I'm not going to let you pull that one, Deborah. Ken, you're next.
I will say, I love what Dale said about don't do email before 11. Dave's been teaching me how to start your day. And it's ridiculous. This guy texts me in the morning, good morning, let's go. And then we go and we meditate on these spike mats that are insane.
Acupuncture mats. It's amazing.
I put it on my Christmas list immediately. But like how you start your day matters, and being intentional about your day. If you saw this guy every day, like this to this to this to this to this to this, it's all planned, it's all strategized, and he's 100% in every one of these meetings. Like, it all starts with beginning your day by pushing this sled, meditating, getting that mindfulness time, running, doing what you have to do to get in the right headspace, because this world's going to tear your headspace apart if you don't take ownership of it early in the morning. So I would say that's the key thing that I've learned on this trip, along with like 5,000 other things, hanging with Dave for 3 days. But that's like the big one, is start your day right.
And he did it. We meditated before
I think
bed.
y'all are going to have to go live and prove this. Like we need to see some story post, Ken, of what this looks like.
Happen, so
yeah, I don't know. I got to lose a few pounds before I'm going to put this
I did the head spike too.
Yeah. And by the way, they're not spikes. It's an acupuncture mat. Look it up online, guys. So you got your closing thought. Dale, what's your closing thought before we hand it? Well, Deborah, are you ready yet? Are you ready for a closing thought?
So the first thing that came to mind, because we're talking about conversion, and my mind goes, before that word, you've got to create the need or create the relationship. And I just want to stress upon, and not to hit up on millennials, but they require a lot of validation, and they like to go online, and they're used to learning online, where if you're just posting things or sharing stories, or if your advice is something that people can get off Google, hence not using a TCA, then you're going to become irrelevant. They don't need you because they can find that online. So create information, share your wisdom on social, have that social proof, because word of mouth referral is not enough. They are going to immediately go look you up. And the best way to differentiate yourself, which I know is 2 of the principles that Dale talked about in the last YouTube video, is your value proposition and differentiation. Leverage the TCA and give better advice.
All right, so Dale, you are going to get the last word at close. but Todd, for us moderating, give us a Todd Bookspan, Mr. Win by Noon closing thought.
All right. So my win by noon closing thought is go back and watch this, right? I think we've got two groups here, right? Maybe three. We got the first group. I don't think that's this group. Those are the people who are just, gonna take this, watch it, and do nothing. So that shouldn't be you guys. I think we've got the group of you who said, gosh, that was a great opportunity for me to learn. I'm going to rewatch what Dale said, and then I'm going to go out and purchase his product because this product is going to make me better. And Ken just nailed it, right? We got to train harder in 2023. And then I think the last group are those of you who aren't in a financial position to do that. And then you should be getting on there, rewatching this video, watch the other YouTube videos that Dave put up of Dale, and then just practice so that you can then close some more transactions and then go back and be able to afford what it is that Dale teaches. And then I should have said this earlier on, but you're all back. You're all invited again. Week number 3 of the 100 call challenge. I haven't told you all this yet, but I'm sending email. I'm moving it to Thursday next week instead of Monday. But I would tell you, I've dialed over 200 realtors the last 2 Mondays. I've talked to over 100, including the number 1 and the number 2 realtor in the country. And it's freaking crazy how fun it's been. But I want to call you all out. Like I had a lot of you on the first week. I had double of you sign up for the second week, but only half of as much show up. So again, no one wants to work that hard. Ken already said it. We got to work hard in 2023. So anytime I talk about working hard in 2023, I'm going to quote Ken Perry. And then the last thing is we're going to have to do a morning routine show coming up. Dave, we'll get Kevin Kaufman on here. We'll get Ken back on here. And we'll have some fun.
So let's get that scheduled. Let's get Kevin Kaufman and let's compare this mastermind around morning routines, which you and I are, crazy fired up about. So
heck yeah.
Dale, closing thoughts from Dale Vermillion.
Well, look, we've talked about a lot of strategies for conversion. Hopefully this has been a blessing to all of you guys and very helpful. The one last thing that I would say is let's back up to the very beginning, even before any of this happens. And here's the key. You have to have the right mindset. You've got to believe in the market. You've got to believe in yourself. You got to believe in your products and your rates. Don't let 6.5% throw you off. Okay. The last 50 years, the average rate has been 7.76. We're way below that. Okay. I used to sell 17.5. I've been through 7 high rate markets and I did my best in high rate markets because that's when advisors stand out. So don't let the economy, don't let the bad news, do what all these folks tell you to do. Start your day with good, not with bad. Don't watch the news and get all the bad media in your head. Start the day with positive things and go into your day and don't let things like rate derail you. And then let me just close with this. We're in the Christmas season. There's 2 things that it's known for: love and forgiveness. And I want to remind you, it's been a tough 2022. 2023 is going to be great. Take the next couple weeks, spend time with the people you love, shut off your cell phones, get rid of your computers, connect with your family and friends, get yourself back in a great space and kick it into high gear in 2023. Go forgive somebody that you had a relationship with and make it right, and just love on people the rest of this year. And you know what? You are going to be awesome in 2023.
All right. So I get the closing word. So I don't know if anybody noticed Dale's shirt, others first. This is a man who's, performed at a high level professionally. He's helped a lot of mortgage professionals perform at the highest level. And he has an incredible charity, Others First. It's othersfirst.com, right?
It's Mortgage Professionals Providing Hope is the organization's mpph.org.
Oh, okay. Well, we'll put a link to that down below. I thought it was Others First.
We got an Others First one too.
Okay, but the one that we wanted, I got it. So make sure you follow him on social media. The best way to say thank you to people that take their time to jump on this event is to follow him. And then I always believe, I don't bring people on this stage that, have a service to provide, whether it's a coach, whether it's a trainer, if I don't think the best way that I can serve you is to invest in their service. So follow him on social media, check out the causes that he's behind. And Dale, really, really appreciate you. Knuckles to everybody on this call.
Too, man.
This is a wrap. Give it a like if you got value, share it with your mortgage friends, and everybody have an awesome weekend. Take care.
God bless.